Welcome back. You're still watching Prime Biz. Now, just a recap on the number of the day. South Africa's biggest platinum producer has registered a steep loss in profits for the 6 months ending June. Anglo American Platinum recorded earnings down 55%. Earlier on, my colleague Nompu Siziba spoke to CEO Chris Griffith about these results. Let's take a listen.
Chris, your operating profit fell quite substantially. What were the factors behind this?
So two key reasons. The first one was that we had lower rand basket prices. So the rand strengthened about 14% year on year. So as a result of slightly higher dollar prices, but a weak rand, we saw a rand basket price down by 3% year on year. In addition to that, we had metal that was deferred from our first half into the second half. As we had a smelter rebuild, a planned smelter rebuild in the first half of this year, and at one of our converters, we had a high pressure water leak into the converter, needed to restart the second one. So all we have is some delay of metal from the first half into the second, but the real issue is lower rand basket prices.
Okay. And then your platinum production targets for the year stand at 2.45 to 2.5 million ounces for this year. What's the point of producing all this metal when there doesn't seem to necessarily be the demand for it?
So we certainly have demand for all of our metal. We did mention when I did the presentation, if you have a look at all of the metal produced in the world, that there's a small surplus of platinum, but a very, very substantial deficit in palladium. So if you look at the basket of metals, there absolutely is demand for our metal. And we've been reducing production over a number of years. So it's not as if we are producing out of line with what the market wants. So you'll recall a couple of years ago, we shut down production at Rustenburg. And every year since then, we've had some further shutdowns of loss-making production. So we absolutely are very attuned to the metal that the market wants, but certainly the metal that we're producing, the market wants, and certainly all of our customers are demanding that metal from us.
All right. And then some analysts, when they look at commodities like oil and platinum, they say that the odds are standing a little bit against those commodities because of the investments that we're seeing in electric cars. It doesn't seem that far away that they're going to become commonplace, which then means that there will be less demand for the likes of oil and platinum. What's your prognosis, particularly for platinum, given this factor, and also the fact that your cost of production and the current price don't really seem to be that far apart?
So I'd make two key points around where the demand for platinum goes. So first of all, platinum goes into automotive sector, but it also goes into jewelry. A big portion of it goes into industrial and also into investment. So you need to have a look at platinum in around all four of those demand segments. Then I'd make a number of points around the automotive sector, because this is one point that, sort of everyone with an opinion has got some commentary about the electrification of the drivetrain. So I'll make four quick points. The one is that the overall vehicle market is set to grow from about 90 million vehicles last year to about 110 million vehicles over the next 8 years or so. So a very healthy growth in overall amounts of vehicles. The second point I'd like to make is that Western Europe diesel that uses platinum is absolutely set to decline. And it'll go from about 50% of the vehicle market in Europe down to about 30%. So that's not good news for platinum. But at the same time, heavy-duty diesel, which is growing across the world, is likely to double in the next couple of years. And then also light-duty diesel outside of Europe is also set to rise. So if you look at, on balance, platinum into diesel, given a growing vehicle market and the fact that outside of Western Europe you still see growth, and importantly in heavy-duty diesel, continues to see about the same level of demand for platinum. The third point I'd like to make is that the electrification of the drivetrain, so you speak about battery vehicles, is absolutely set to grow. But electrification of the drivetrain doesn't only take place in battery, it's also hybrids, which are by far the biggest segment of electrification. So a hybrid is both a battery and an engine. and that's good for PGMs because it's still got an engine, still got an exhaust. And then lastly, fuel cell electric vehicles, which are mostly used in bigger vehicles, where there's a very heavy use of platinum. All three of those segments continue. Only one small segment of that electrification of the drivetrain is battery electric vehicles, mostly used in small vehicles, and that is overall still a very small segment of the overall market. So our view is absolutely electrification increases, but what it's not going to do in the next 10 years or even longer than that, it's not going to disrupt the whole of the automotive market. And likewise, actually, it's not going to disrupt the need for oil over the next 10 or 20 years.
Okay, fair arguments there for your optimism. And then in terms of job losses, Chris, we know that the mining sector in general has been under pressure. When it comes to Anglo Plats yourselves, what's the situation there? Have we seen some more job losses under the period that you're talking about?
So about 70% of the industry is currently loss-making, and somewhere between 30% and 70% over the last 4 years. So you can see this pain that the industry's been in has been coming now for a number of years. And yes, there's been ongoing job losses in our industry for a number of years. We haven't really seen job losses in the first half of this year, but certainly going forward, one of our joint ventures, Bokoni Mine, is likely to be placed on care and maintenance by our managing partner, which is Amplats. And unfortunately, that's going to still come through in the second half of this year. There's a number of other announcements that have been made from a number of our peers, where there will, in all likelihood, given this very low pricing environment that has been sustained for so long, there's likely to be further job losses. I think importantly for Anglo Plats, even under this very difficult market environment, where many of our peers have been going back to the market to be recapitalized, Anglo Platinum remains cash positive and continues to reduce the level of debts in the company.
Now, the total number